In business news, in the manufacturing sector and agricultural sector, the Purchasers Managers Index report shows the fastest input cost of operations in January. Despite the rate of inflation easing to a 3-month low in January, there was a surge in purchasing prices in the private sector. This is due to the rising cost of fuel and raw materials that were made worsened by the weakness of the naira in the foreign exchange market. Also, rising cost of machinery and shortage of power supply, which resulted in charge inflation that was above the average. The report also showed that the headline PMI declined to 53.5 in January 2023 from 54.6 in December 2022, despite the increase in employment rate. Although the rate fell off, overall input cost inflation continued to moderate in January, easing for the second month, but cost pressure were more pronounced in the manufacturing sector. Now, following the need to curb aggressive inflation rate by the consistent hike in monetary policy rate by the Monetary Policy Committee of the Central Bank of Nigeria, which hit 16.5% in 2022 and 17.5% in 2023, as in January this year, a total of 6 Tier 2 banks spent 413.5 billion naira on customers' deposits and local and foreign borrowings. This is 32.34% increase over the 312.43 billion naira in the 2021 financial year. Also, this hike in MPR increases interest income in 2022 to 1.01 trillion naira from 756.6 billion naira in 2021. The banks are Fidelity Bank PLC, Unity Bank PLC, Wema Bank PLC, FCMB Group PLC, Stanbic IBTC Holdings, and Sterling Bank PLC. As an evidence of significant growth in the pension sector, assets rose by 1.56 trillion naira in 2022 to stand at 14.99 trillion naira as of 31st December 2022. In 2021, there was an increase of 1.12 trillion naira to 13.43 trillion naira. The contribution pension scheme also recorded 333,002 new contributors, bringing the total membership to 9.86 million. Pension sector witnessed growth through pension contributions and investment returns. Meanwhile, CPS ensures that the investment returns generated from pensions contributions are compounded, which avail the contributor of financial security during retirement. Outside our shores, Asian shares slid today after a run of upbeat economic data from the United States and globally lessened the risk of recession, but also suggested interest rates would have to rise further and stay up for longer. MSCI's broadest index of Asian Pacific shares outside Japan fell 1.9%, with South Korea down 1%, Chinese blue chips lost 1.6%. Japan's Nikkei added 0.7%, encouraged by hopes that the BOJ will keep policy easy. European Eurostock 50 futures fell 0.6%, FTSE futures 0.3%, S&P 500 futures, Nasdaq futures both eased 0.3%, as January payrolls reports forced investors to price in the risk of more hikes from the Federal Reserves and less chance of cuts later in the year. The Food and Agricultural Organization of the United Nations says global food prices dropped for the 10th consecutive month in January, tracking monthly changes in the global prices of commonly traded food commodities. The latest index averaged 131.2 points in January, falling by 0.8% since December. The report also shows a slight decline in prices of meat and sugar. In the same vein, vegetable oil prices fell by 2.9%. International wheat fell for the third consecutive month, while cereal price remained unchanged since December. This is due to strong harvest and favorable weather in the world. Meanwhile, there is a slight hike in global maize prices, which is rooted in a strong demand for exports from Brazil and concerns over dry conditions in Argentina. In Indonesia, some palm oil export permits will be suspended to secure domestic supply amid rising cooking oil prices ahead of Islamic festivals. According to Senior Cabinet Minister Mr. Lutfi Pranjatan, palm oil exporters has accumulated large shipment quota from last year, and they now had little incentives to supply the domestic market. He explained further that despite exporters fulfilling their domestic market obligations, their rights will be suspended till the situation is under control. However, exporters could increase their quota when demands to the domestic markets are met. Crude oil prices hinged up today after falling 8% last week to more than 3 weeks' lows, as concerns that slower growth in major economies may limit fuel consumption and outweigh signs of a demand recovery in China. The world's top oil importer, U.S. West Texas Intermediate crude, rose today to sell at $73.82 per barrel, with an uptick of 0.59%. Brent crude futures also experienced an upsurge of 0.79%, selling at $80.57. Bonny Light sells at $81.96 with a downward price review of 0.19%. And for the OPEC basket, crude oil dealers are offering $80.43 with a downward price margin of 2.89%.